Great evening, fellow traders. This is Austin. It is Tuesday, April 11th, into the week preceding Easter Sunday and all what goes on. Going to tell you about an interesting email conversation I had and my plans for trading this week and onwards and various things. But first things first. Yesterday I did not trade. One of my two beloved dogs, they're nearly 11-year-old Springer Spaniels now, Carmen and Lexi. Lexi is winding down. She has some serious health issues that looks like her time here is drawing real short. So yesterday was a day of handling dog health situation. I didn't even look at the markets, but I'll tell you what went on. I'll tell you what I would have seen, and quite frankly, the same thing you would see if you knew the CM method of trading. There was a buy signal. Price. This is yesterday, of course. Prices jacked right up off the open. There were no buy signals. It just walked right away. And that's not uncommon. The first half hour of trading is usually is often a algo battle where there's nothing, and then a little later on, past 10 o'clock, is when things settle down and you actually get setups. Not always, but usually. Once in a while, you'll catch something between 9:30 and 10, but don't count on it. You won't make a habit of that. So it was a buy signal that went nowhere. At worst, it would have stopped out for the half point stop or the 1 point stop that I used, $50 initial stop. More likely, I would have trailed it out at par, but whatever. And then this is very common in the S&P, and it's somewhat common in all symbols, but very common in the S&P. Where there was a buy signal prior, there will be a sell signal to follow the works, and vice versa. In other words, support becomes resistance, resistance becomes support, and failure one way becomes success the other. All right, and so those are just ageless axioms in trading in the markets. You know, a failed pattern is probably the most powerful thing that you can trade with the highest degree of probability, and that's because the majority of people were in the trade going one way, and when it fails to materialize, they all scramble to go the opposite direction, and that's the momentum that carries. As a matter of fact, most HFT algos are designed for that. They're designed to trip the market, to fake out a majority of man and machine one way and then take it the other direction dramatically without letting other people out or to get in or whatever. So long story short, buy signal here didn't go anywhere. Sell signal here went everywhere. And then there was a secondary sell signal, and that's not uncommon in succession when you have a change in direction. So here's a change in direction from up to down, and then there's the first pullback, and here's the second wave. And this is another timeless, ageless axiom of the markets. The second wave is generally the most powerful, covers the most distance, most direct, and so on. And that's just herd mentality. People were going to the long side first, then they were going to the short side, and then there was some people missed that, and some people hung on to their longs too longer than they should have. And then on the pullback, the longs bailed, and the shorts who missed the first time are getting in the second time. And so it's that wave of momentum of buyers selling to close and sellers selling to open. That is the momentum that literally creates the fundamentals of the second wave concept, and there it went. And there were more trades afterwards, but who cares? Because that's all you need for the day. So that was yesterday, and of course I didn't participate, but trees fall in the forest and they'll still crush a squirrel whether you're there or not. And the market rose and fell yesterday, and it still offers trades whether I'm there or not. The market surely doesn't give a damn about me. It's going to continue to do what it does, whether I'm in the market or not, and whether I'm dead or alive, quite frankly. That's a fact, straight fact. So anyone who thinks that nothing would have happened if I wasn't there sure has a higher opinion of me than I do of myself. So price tipped over today, and they did not signal a sell on the way down. Once again, price just blew off, and now coming back to the Easter week thing, this is a rather thin liquidity week historically. Most people are on vacation with their families. Even before markets were totally machine dominated, it was quite a phenom for the week of Easter to be low volume. Even the Monday afterwards, and sometimes the week afterwards. That's just natural. Look at all your friends are on vacation. Everybody's at the beaches with their family. They're not trading. That's the way it is. And it's going to be very thin tomorrow, Ash Wednesday. All the Catholic faith are going out and doing what they do on Ash Wednesday, and I think there's some Jewish religion things taking place too. And then, of course, Good Friday the market is closed, so there's going to be a concentration of low volume, such as it is. Thursday morning, everybody piles in, and then they're going to bail and enjoy a 3.5 day weekend. So that's what you can expect. Thinner volume and volatility going ahead than what we've seen now, but this is what we've seen. Price took off, and then it double pumped here, and then it dropped. I can't say there wasn't a sell signal in there. I can say that I missed one. I also was distracted at this stretch. Now there was a sell signal. There was nothing here. That's just straight smoke down. Hit the 233, 90+% probable. Fulfilled that. Pull back to the open range. And how many hundreds of times, hundreds and hundreds and hundreds of times have I said through the years after my discovery of the CM roadmap process exactly this? Okay, hit the 233, pull back to the open range, and now they go back to there, and then they go to the roadmap 1, and then back to the open range, and lately they just die on the vine, just stuck to the open range from about 12:30 into the close, went nowhere. So you had a sell signal going down and a buy signal going up, and that was the whole day. If you caught one or the other or both, that was your day. And in my case, there was sell signal down, buy signal up. In my case, I caught enough of the up into the that's where it was for me, into the pullback. I off the 233 to the open range, caught that. And that was good for 2 and a tick, and that's all I'm looking for. I'm looking for 2 and a tick every day, every day, every day, every day, and there we go. And as I said before, same principle as yesterday. The pivotal point, the axis. This was the buy signal. This same zone becomes the sell signal, and that worked. And that is the drop that you see. So there's the sell signal. There's the first pullback. There's the second wave. Same phenom is before. Markets, you'll never find 2 days that are identical. That doesn't happen. But you'll find segments of many days which are identical. And so, same process. Breaks the open range one way, pulls back and tests, holds, continues on to the CM roadmaps because they are the intraday profile of all markets. And that's how it was. And this is trading for me forever, quite frankly. I have no further interest in anything else. I have no interest in crude oil. I don't even look at it. No interest in the Russell. No interest in anything. No interest in looking for 5-10 points. No interest in trade all day, every day. No interest in anything at all except 2 points in a tick or better, and done. And so when I wrapped it up this morning, prior to 10:30 or whatever the case is, I left. I shut the screens off. I'm out the door. I'm gone. And living life, and that's how it should be. And that's how trading should be for you. Why would you want to trade every minute of every day other than foolish greed? But I'll tell you what that'll do for you, or I should say do to you. That will stick you in periods like this where the market goes graveyard dead, and you will look for reasons to take trades. Trust me, and you will piss away your capital. Whatever you made here, you will give back here in the chop and then some. You will turn what should be a winning day into losing days. Some of them big, and some of them huge, and some of them frustrating. Do you know how I know? Because I've been there, and so have tens of thousands of other traders. Don't do that. Learn from my mistakes and learn from tens of thousands of other traders' mistakes. Trade early, capture small gains, shut your screens down, and go do something else with your life and keep your money. Trust me, that's what works. And it works well. Back to the crude oil, and I'll get to the interesting email. Crude oil, comatose dead. And you'll see in the headlines, crude went, it did this, that, or the other thing, and it made X, Y, Z moves or so on. This is nothing. That is a completely dead graveyard, pile dirt on and walk away market. There's absolutely nothing there. Nothing. It's unfortunate. And the same thing yesterday. Absolutely nothing. And the same thing the day before. Barely anything. And that's crude oil more often than not. Like I said, I've lost interest in all these other markets and try to find somebody making money in those. You won't, because there's no money to be made. It goes nowhere. A 40, 50, 60 tick range is a joke, and it's a sad one at that. This is very sad. You know, it pains me to see this in crude oil, which leads me to the email. So I get one from a random person saying, I caught your YouTube's videos and I looked at your website and everything's interesting and so on. I'm interested in your program. Can you please send me 5 years of tax returns showing profitable trading using these methods? Sincerely, XYZ. Well, no, for a number of reasons. I ain't going to send any random stranger on earth any tax returns of mine or any financial information or anything like that. So first of all, that ain't going to happen. That's laughable. But secondly, there isn't 5 years of existence of the CM scalper mode in the S&P, because 5 years ago, we were all trading crude oil with the 200 tick ranges. 5 years ago, we were trading 100 tick CL trades and catching them frequently. 5 years ago, we were disappointed when a CL trade would stop out too soon at 40 ticks, 50 ticks, 60 ticks, 80 ticks, because we were expecting 100 tick trades on every turn, and we caught them a lot of times. 5 years ago was an eternity of different markets. So what happened 5 years ago is as irrelevant today as 5 years from now is going to be what happens today. I promise you, 5 years from today, markets will be dramatically different. In what way? Who knows? Maybe they won't exist. Maybe volatility will get so thin they'll implode. Maybe volatility will become so wild and markets will expand and the algos will have morphed into something else and more human traders will be back. And it'll be like 99, 2000, 2001, 2002 again. Who knows? Nobody does. But I can promise you this. It'll be vastly different 5 years from now than it is today. But I'll tell you what I'll be doing if I'm still trading 5 years from now and I haven't retired or died or anything such, because tomorrow's promised to no one. Okay, assume nothing. 5 years from now, I'm going to be shooting for 2 and a tick in the S&P because it works. It's a comfort zone. It conquers all markets, low volatility, high volatility, sideways volatility, whatever the case may be. Consistency, consistency, consistency. And lastly, it's the most efficient way of trading, to be done within minutes or a couple of hours in a given day, and then you're off to do all of the things that you wanted to do if time and money were free. Okay, if you had all the time freedom and the money freedom you wanted, what would you do with your life? That's what you need to do when you're done trading for the day as soon as possible. Hope this helps. Looking forward to talking to you again, and as always, best trading wishes.